Hello friends, namaskar. Welcome all of you to my channel. Normally साथीहरु चाहिँ हामी अब most of the theories of finance भन्दाखेरि assumption of the market rationality को कुरा गर्छौं र आजको whole discussion हामी चाहिँ efficient market hypothesis EMH र यसको forms या types of market efficiency as discussed by pharma including its relevance part and what could be the challenges when we really we would like to test the assumption of the efficient market hypothesis. Basically emerging market को context मा भन्ने हो भने कस्तो challenge हुन सक्छ त त्यसको बारेमा पनि छलफल गर्ने छौं साथीहरु चाहिँ. Now based on this background आजको whole discussion मा हामी के डिस्कस गर्ने छौं त that's all about कि discussion outline को कुरा गर्दाखेरि that's the introductions, capital assets pricing model यानी अर्को चाहिँ that's the efficient market hypothesis, historical development, forms of market efficiency, or simply we can say that that is the EMH. Okay. Similarly, informations and efficiency of the capital market, and the lastly, आजको discussion भनेको market anomalies को कुरा गर्छौं, which criticize the overall the assumption of the market efficiency, friends. So first of all, let me clarify about the that's the pricing of the assets seem to be complex भन्छौं in the cap market, which is contrary to the commodity market भन्छौं, in which the prices are determined by the interactions of the demand and supply through the price mechanism भन्छौं. यदि हामीले capital assets pricing model कै कुरा गर्दाखेरि which was developed by Sharpe in 1964, even the Linter 1965 र Machine भनेको 1966. As for this model भन्ने बित्तिकै हामीले के बुझ्नु पर्यो भने that's a ERI, that's a required rate of return, or you can say that expected required rate of return भनिसकेपछि that's a risk free rate जस्तो treasury bill को rate भन्न सक्नुहुन्छ. ERM market return जस्तो in our case NEPSE return को भन्न सक्नुहुन्छ minus risk free rate. That's difference between ERM minus RF is known as market risk premium, and this is the beta value which measures the systematic risk भन्ने बुझ्नु पर्यो. So this model could be written as a risk free rate plus market risk premium into beta. Okay. Similarly, in 1970, the firm defined as a market as a informationally efficient in his book entitled that's the efficient capital market, a review of the theory and the empirical works साथीहरु चाहिँ. र अर्को हामीले के बुझ्नु पर्यो भने that's in an efficient market the market price of the stock is supposed to reflect in your fundamental value जस्तो जुन कि price stock today भन्छौं. So present value of the expected cash flow over the period discounted by the required rate of return जुन कि मैले cost of equity भन्छौं KE भनेको that is the same thing, you can use it. Okay. अब जाउँ हामी साथीहरु चाहिँ what about the case of capital asset pricing model जुन कि value of the as per this model the value of the stock is affected by the KE and which is linearly related to the risks. Okay. So CAPM भनिसकेपछि यदि हामीले अब जस्तो कि तपाईले भनौं न ER of Tata Consultancy Services को निकाल्न खोज्नु भयो भने so is this RF ERM minus RF and beta of TCS निकाल्नु पर्ने हुन्छ, where we could say that RF is the government treasury bill rate, that's the repo issues by the RBI, Reserve Bank of India. ERM भनेको you can say that expected return on the market index, जस्तो market index को लागि मैले Bombay Stock Exchange Sensex 30 को लिएर छु भने, while beta value is simply we can say that covariance of RDCS, RM and divided by variance of the market. So simply this is the one option. Yeah, covariance निकाल्नु पर्यो भने we could say that the covariance is that RTCS minus this average and similarly RM minus RBRM का average whole divided by n minus 1 गर्न सक्छौं. Or simply when we talk about the covariance, okay, the covariance भनिसकेपछि it will study the returns tend to move in the same direction in the positive भयो भने, तर negative भयो भने we say that the covariance indicates they move in the opposite direction भन्छ. Okay. र variance of the market return को कुरा गर्दाखेरि which study the measures of risks भन्न सक्छौं. र capital assets pricing model को भन्दाखेरि अब this is all about friends this is x-axis we have a beta value, higher the beta value we see that the stocks are more volatile, or in y-axis we have expected return, and this is the treasury bill rate and यसलाई हामीले ERM भन्छौं. Okay. So simply this is the equilibrium point where बीटा इज 1 भन्छौँ ओके अब जाउँ हामी साथीहरु चाहिँ दिस इज अल अबाउट व्हाट अबाउट द हिस्टोरिकल EMH historical development जस्तो कि concept of market efficiency can be tracked back to the French mathematician भन्छौँ जुन कि अब त्यतिखेर चाहिँ 19th century को टाइममा द theory of speculation भन्छौँ and he worked as on the stock and commodity prices in order to find out if they fluctuated randomly or not. त्यस्तै 19 that's a 1905 भन्ने बित्तिकै कार्ल मार्क्सको कुरा गर्छौँ which was a English mathematicians and a statistician too who introduced the concept of random walk भन्छौँ साथीहरु चाहिँ which is also known as the drunkard walk भन्न सक्छौँ जस्तो कि कोही अब रक्सी खाएर चाहिँ we could not predict the movement of the drunkard people. Similarly that is the challenge. Similarly Kendall in 1953 को हिसाबमा चाहिँ that's all about the first time used the random walk in finance literature and found that the price seems to follow a random walk and they may that means they may go up or down on any particular भन्न सक्छौँ अब in any particular day भन्न सक्छौँ yeah that's regardless of the what had occurred on the previous day अब हामीले अब फार्मा 1965 कै भन्दाखेरि discuss about the empirical evidence supporting the random walk theory in its doctoral dissertation अब फार्मालाई हामी father of modern finance पनि भन्छौँ okay now यो कुरोलाई हामीले forms of capital market efficiency को कुरा गर्दाखेरि we have basically three forms of market efficiency. One is the strong, semi-strong, and the weak. अब strong form भनिसकेपछि कस्तो छ भने is all about that will show us you can see this picture also जस्तो कि हामीसँग के छ भने strong form भनेको which shows the all public and the private information which is noted by the A while semi-strong form भनिसकेपछि all public information okay so that means no investor can earn excess return abnormal return भन्छ जस्तो R र AR भनेको 0 हुन्छ भनेको त्यो डिफरेन्स भन्नु सक्नु पर्यो या R equals to expected rate of returns okay so we can say that weak form भनिसकेपछि that's a PT equals to PT minus 1 plus UT that's error त्यस्तै PT minus 1 त्यो भने error term फेरि change in price फेरि error term भन्छ that's a random walk साथीहरु that means we can say that we could say that yeah H is a subset of P and which is a subset of A okay this way we could conceptualize the concept here that means the market where the prices fully reflect the all available information जसलाई हामीले अब informationally efficient भन्छौँ as discussed by the Pharma in 1970 as for this definition friends of EMH efficiency market yeah you can say efficient market we can say that efficient and efficiency market or efficient market can exist if the following condition holds just all investors have costless access to costly information available informations all investors are capable analysts and all investors pay the close attention to the market prices and adjust all their holdings no investor can make the abnormal profit yeah that means other than by chance by using the set of information so that means the random walk theory भन्दाखेरि challenges the traditional investment strategy and has a significant implication for the investors and portfolio management so that's why we can say that friends कि हामीले past movement of the trend of the stock price of the market that means yeah that is can't be used to predict the future movement that is the part that means the assumption of the overall the market efficiency is that whatever the other announcement what are the information private and public information all will be adjusted naturally in the fundamental value of the stock prices okay so we can say that now what about the forms of market efficiency so as I discussed earlier that's the one is the weak form and the next one is that semi-strong form and next one is the strong form okay so that means the question is about is the stock market efficient so that is a matter of research and we could test the assumption of the market efficiency even in our context too that means the random walk and efficient market hypothesis just okay you can see this picture Mr. Market अब भनौँ न उहाँ ड्रिङ्कको बोतल लिएर लडिराख्नु भएको छ लड्न खोज्नु भएको छ that means as an investor we can't predict this drunkard people movement similarly that's why यसलाई हामी अब we can say random walk theory पनि भन्छौँ. Okay, so this is the weak efficient, semi strong form, and this is the strong efficient form भन्न सक्छौँ. Okay, अब जाउँ what about the case of information and the efficiency of the capital market. So information भनिसकेपछि that's about your public announcement भन्छौँ, and we could use the event study methodology part. So this is the before takeover भन्न सक्छौँ, and this is the discussion part, this is the announcement, and after the public announcement how it affects the stock price. If you are doing so, then we can use the event study methodology was we can say the pioneer in economics, but the Pharma Fishers and Jensen in an event role in 1969 in their seminal war paper, that's adjustment of the stock prices to the new information. So you this is all about your, we can say that event study timeline. So we say that this is our event day, okay, event date, okay, and this is the 2 days post and pre, we can say that, and this is called the estimation period, which is also known as the clean period, friends. Okay, we could test the assumption of semi-strong form of efficiency, we can say that. Now, and what could be the challenges in the real practice because of the market anomalies? It's very difficult to apply the market efficiency, friends. Okay, as I discussed, like when we have any announcement, if it would affect the market price, that means market would not be efficient. Okay, so that means the market anomalies could be like irrational investors. That is the starting assumption of behavioral finance. We can see that, yeah, government regulations, inefficient market. So types of market anomalies भनिसकेपछि this is the momentum, we can see that, size, yeah, post earning announcement drift, this is the value anomalies, yeah, that's the stock value, can say that, seasonal anomalies, liquidity, and so many other factors too which could influence the overall stock price behavior, friends. Okay, today आजको whole discussion मा हामीले चाहिँ अब market efficiency, that's the forms of efficient market hypothesis as discussed by the pharma, and some of the historical background of the market efficiency, we can say that, and market anomalies सम्म हामीले आज डिस्कस गरेका साथीहरु चाहिँ, र I hope आजको discussion would be important for all of you, even though you are in the area of finance, yeah, investment, and even though let's say that you are player in the market, you are going to invest in the market, then you try to understand this overall concept, friends. If you like this content, please like पनि गर्नु होला, र that's मेरो channel Finance Guru Pawan Kumar Jha लाई subscribe पनि गर्नु होला. Thank you all of you for watching this video. Please take care all of you. Thank you.